So we are here for discussing the most important questions of your accounting subject. So let's start today's class. And if you're new on the Officers Adda 247, hit the subscribe button and download the Adda 247 application so that you can get everything at a one place. So one important announcement also from our side that our selection batch is just going to start from the 20th of May, and so this is the last opportunity when you can just enroll for the fresh batch. Okay, so in this batch you only have to use the code Y422, and with this code you are going to get the big discount on the batches. So in this batch you are going to get the ebooks, mock tests, live classes, recorded classes, everything you are going to get in this batch. Okay, so basically whatever the sessions, whatever the lectures that we are just going to deliver to you, that all based on the fully exam oriented. Okay, so let's start today's session with the very first question of today. That is, Mr. A will receive 30,000 per annum at 10% for 4 years, and he is interested to know the present value of the amount he would get at the end of the fourth year and the value that is given PVIFA. Okay, so PVIFA that is given in this case. How to solve this kind of the questions in the examination, you have to understand the very first thing. You have to understand what is the relationship between the present value and the future value. So whenever we talk about the relationship between the present value and the future value, so present value is equal to the future value and it would be divided by the 1 plus r to the power n. When we talk about what this value is given in this particular sessions, just a minute, for just a minute. Okay, so when we talk about like PVIFA value is given here, that is 3.16986. So you can understand whenever you only have to just understand this formula, that is present value is equal to future value and it will be divided by the 1 plus r to the power n, where this value like 1 divided by 1 plus r to the power n is actually known as a discount factor. Okay, so whenever this value would be provided to you, that is present value, interest factor, annuity. Now you can understand what this term, that is annuity, what means, that is series of the payment. That means you are just going to get the 30,000, 30,000, 30,000 like for the 4 years. Okay, so this is considered as an annuity. Okay, so now that means when we talk about the present value, interest factor, annuity is given, that means the value is actually given like this, like the value actually given of this value, that is 1 divided by 1 plus r to the power n. Sometimes in the examination you may also get this value in terms of the discount factor. Okay, so now if I have to calculate the value here, so we know that the present value should be equal to the your future cash inflow, that is 30,000. Okay, and it would be divided by the 1 plus r to the power n. But you know that the value of the 1 divided by 1 plus r to the power n is actually given into your like in the question. Okay, so how to calculate this? Now you would just multiply in the 30,000 multiplied by the 3.16986, and you will get the question answer of this 95,096 approximately. Okay, so that's how you actually calculate the questions of the like present value, interest factor, present value, future value. Okay, the only formula you have to understand, that is present value is equal to future value, it will be divided by the 1 plus r to the power n. And sometimes this future value is actually given in the terms of the future cash inflow, right? Next question. The discount factor at 10% is 0.909 at the end of the first year, 0.826 at the end of the second year, 0.7512 at the end of the third year. And if the cash inflow for the second and third year from a project that is given, so what is the present value of the cash flow of the third year? Now again you have to understand, here we have to find out the present value for the third year, and we know that we actually have to write what, that is future value of the third year, and it would be divided by the 1 plus r to the power n. Okay, now you can understand the future cash inflow here given, that is 10,000. Just right here, that is 10,000. And now the discount factor for the third year, because we are talking about, we have to find out the present value of the cash flow for the third year. That means that would be equal to 10,000, and that should be just multiplied with your discount factor at the end of the third year, that is given the 0.7512. So that would be equal to the 7512. That would be your answer for this question. Okay, so this is how we have to solve the questions in the examination of these kind of. Okay, the only thing you have to understand, the very first thing, that the formula, that is present value is equal to future value, and it would be divided by the 1 plus r to the power a. Second, whenever the discount factor is given, the thing you have to understand, it is the discount factor, right, where r just denote the discount rate. Okay, and this value is denoted by the discount factor. So now if I just ask you that, now whenever this kind of the questions given, you have to solve in this way, and when the value that is given the PBIF, okay, that means the same thing you have to understand, right? I think it is understandable. So the answer of this question, that would be the 7512. Okay, next question. Goods of the value of the 5,000 withdrawn by the owner for his private use. You know, due to business entity concept, we actually understood that owner and its firm both are the different entity. So whenever the owner just withdraw the amount, okay, whenever we're talking about the owner is withdrawing the amount, while you can understand in this scenario, the two accounts would be included. The one account, that would be the drawing account, another account, that would be your purchase account. Okay, purchase account, no, that would be your cash account, right? So whenever we're talking about the amount, that means you will say that one account, that would be the drawing account, another would be, that would be your cash account. Okay, but when we talk about if owner just, if owner just withdrawing the goods of the, like the value, if owner is withdrawing the goods of some amount, that is suppose that 5,000 amounts owner is withdrawing, so you can understand in this scenario, the one account, that would be your drawing account, and another account, that would be your purchase account. You can understand in this way, because we are talking about your purchasing would reduce by the 5,000 rupees. Okay, so in this scenario, if we are talking about the goods of the value, so we are talking about the goods, so you have to understand there would be the purchase account would be included. Okay, and if it is given the amount, that means amount of 5,000 that is withdrawn by the owner for its personal use, then we are talking about the cash account. Okay, so I think it is clear for everyone. Whenever we're talking about the amount, you have to understand it is for the cash, and whenever we're talking about the goods, then we have to understand it is about the purchase account, right? Next question. There is a 10,000 as per the bank passbook. Okay, a check is deposited but not credited by the bank for 20,000, and check of the 15,000 is issued but not cleared. So what shall be the balance in the cash book? Now just understand, if we talk about there is a 10,000 as per the bank passbook, so you can understand, like whenever the passbook balance is given, you have to write the cash book here, and you just may have to make the table like this, that is cash book and the passbook. Okay, now if I talk about there is a 10,000 as per the bank passbook is given, so you can understand this is your 10,000, this should be your 10,000 under this balance, and a check is deposited but not credited by the bank for the 20,000. That means customer is actually deposited the check, but it is not updated by the bank, or it is not credited by the bank. In that scenario, you can understand this would be reflect as a zero. Okay, so in that scenario, cash book would just greater than the passbook balance, because here we are just going to calculate the cash book balance, so we are talking about the cash book. Okay, so cash book balance, that would be just greater than or than your passbook balance, so that you will write that is 20,000. Now again, and check of 15,000 is issued but not cleared. So in that scenario, you can understand actually customer issued the check of 15,000, and the in the bank statement it is actually reflecting as a zero. Okay, because it is not cleared. So in that scenario, you can understand the cash book balance is a lesser than the passbook, so you will write that is minus 15,000. So that would become your what, that would become your value of the 15,000, and that should be your answer as per the cash book. Okay, so this is how you have to solve the questions in the examination also. Next question. The rule debit all expenses and losses and credit all income and gains that relates to which account category. Now again you have to understand, whenever we're talking about the account categories, that there is a first account that is personal account category, there is another account category that is real account, and another one that is a nominal account category. So for all, like personal account, you can understand like human being, artificial representative personal account. For the real account, you can understand all the asset comes under the real account category, and the nominal account, that all the expenses and the income and gains we talk about. So the correct answer, that would be the nominal account category. Okay, next question. In the written down value method, the amount of depreciation is calculated on which of the following method? Okay, the original value of the asset, depreciated value of the asset, is scrap value of the asset, and any of the above, whichever is lower. Okay, so you can understand, like when we talk about the written down value method, when we talk about the reducing value method. Okay, so in that scenario, you can understand always the depreciation rate. Okay, whenever we're talking about the depreciation rate, that always applicable on the previous year end value, that always applicable on the previous year end value. Okay, so when you're talking about the depreciation rate always applicable on the previous year end value. So you can understand we actually talking about the depreciated value of the asset, right? So in the written down value method, the amount of the depreciation is calculated on which of the following? Then you have to understand the correct answer, that would be your depreciated value of the asset, right? So this is how you have to solve the questions in the examination also. I hope it is understandable for everyone, right? So the correct answer of that should be the depreciated value of the asset. That should be your correct answer for this, because the amount of the depreciation that actually calculated on the previous year and value. Okay, so this is how we have to solve the questions. Next question. A firm earns profit of the 12,000 and its partner had drawn 8,000 during the year. So what was the capital at the beginning if it is 43,000 at the close of the financial year? Okay, whenever you are just going to solve any questions that is related to the capital, so you have to understand, you just start with this, like the capital in the beginning, because in this question the capital at the beginning is not given, that you have to calculate. So just understand as a, just write as a x. Okay, now you can understand a firm earns profit of the 12,000, so just plus by the 12,000 rupees here, and its partners had drawn 8,000 rupees. So if the partner had drawn 8,000, just subtract this. What was the capital at the beginning? You have to calculate. If it is 40,000 at the close of the financial year. Okay. Now how to calculate this kind of the question? Whenever we talking about, we started with the x capital. Okay, so we started with the like our financial year with the x capital. So after that you actually just earn a profit of 12,000. After that our partner actually withdrawn the 8,000 rupees. So now just tell me what should be your capital at the ending. Okay, that should be the 43,000. Okay, now just tell me, if we are just going to solve this equation, that what capital at the beginning there would be, that would be the 39,000, and that should be your answer for this question. Okay, I hope it is understandable for everyone. In the same way you have to solve the questions in the examination also, right? Next question. The party who is entitled to receive the cash of a bill receivable is called what? Whenever we're talking about the bill of exchange, the very first thing that you have to understand, actually we talk about the three parties. The one party who is known as a door, the another party who is known as a doi, and the third party that is known as a payee or endorsee. Okay, so now you can understand, when you're talking about the party who is entitled to receive the cash of a bill receivable, that actually known is a door. Okay, so the correct answer of this is a door, and door is actually just known as a maker of the bill of exchange. Okay, you can also say that that is a maker and as well as a seller of, like the seller. Okay, and when we talk about the doi actually just understandable as a acceptor of the bill of exchange, because the doi is a buyer in the bill of exchange. Okay, so that is a very important thing you have to understand. Whenever we talking about the door actually known as a maker, and you can also just say that the seller. And when we talk about the doi is actually just the acceptor or the buyer, and pay is known as your third party. Okay, so pay known as a third party, right? So the correct answer of this question, that would be the door. Next question. While preparing the balance sheet of a company, account receivables is shown under which head? So whenever we're talking about the account receivables, the important thing you have to understand, the account receivables, okay, that actually considered as an asset for the company, okay, and asset as well as a current asset for the company, okay. So the correct answer of this, that would be the current asset, account receivables. You can understand, like when we talk about the bill of exchange, there is a seller, there is a buyer. Suppose that buyer purchased goods on the credit. Okay, so in respect of that, you are actually just understanding the bills receivables or bills payable. Okay, so you actually understanding the bills receivables and the bills payable. So bills receivable, we actually talking about, like suppose that we are talking about the door. Okay, so we are talking about the bills receivable, and when we talk about the bills payable, we are talking about the DOI, or you can also understand as an acceptor of the bill of exchange. Okay, so the same bill of exchange is actually considered as a bills receivable for the door, and the bills payable for the DOI. Okay, so in that scenario, you can understand, while preparing the balance sheet of a company, account receivables is shown under which head? So the correct answer of this, that would be the current asset. That would be your correct answer. Okay, next question. The expenditure which helps increase the earning capacity of the firm is an example of. Now just tell me, whenever we're talking about the expenditure that helps increase the earning capacity of the firm, that actually considered as a capital expenditure. Okay, so the capital expenditure, you can understand, whenever you actually just do the expenses on the company for the long term perspective. For the long term perspective, when you just do the expenses for the company, that actually known as a capital expenditure. Okay, so the expenditure that actually helps increasing the earning capacity of the firm, that actually the example of the long term purpose. Okay, and when we talk about the revenue expenditure, you can understand it actually uses for the day to day, like the day to day maintenance. Okay, you can understand the day to day maintenance, or you can also understand it is all about the operating expenses. Okay, so revenue expenditure is actually equals to the operating expenses. Operating expenses, that means that like when we talk about the day to day business operations. Okay, so like regularly routine or day to day business operations, so you can understand by this. And the capital expenditure, when we talk about the long term perspective, so that would be your answer. So capital expenditure that actually helps increase the earning capacity of the firm, and that is the example of the capital expenditure. Okay, so that's all for this session. I hope you all learnt from this session. Okay, so now I just want to say you that the bilingual and the English medium batches, both are you are going to get, like in the for your JIB courses. You only have to use the code, that is Y422, and with this code you are going to get the discount on the bilingual as well as the English medium batches, as well as you can also subscribe for the test packs, because you can understand the test always gives a final test to your preparation. And in like for test packs, you are going to get the flat 17% off. You have to use the code Y422 for this. Okay, and you are going to get the big discount for that. Okay, so thank you everyone for joining me in this session. Now we'll meet on the tomorrow at the same time at the 7 a.m. So like this video if you're liking our effort, liking our content. Okay, and share this video to your friends so that maximum number of bankers can get benefit from this. Okay, so thank you everyone for joining me.